If you are like me, you have made a decision in your life to pursue the path of entrepreneurship and to build wealth for yourself, to extricate yourself from a life situation that you are not happy with, and to create a sustainable and happy future. We live in a world where if you don't take things into your own hands and create a vision for your life, society will be more than happy to do that for you. More worker serfs create a population that is easier to control, reduces competition, and makes it easier to implement and increase taxation. Perhaps this is why I didn't get taught personal finance in high school. If you have managed to build some wealth for yourself, allocating your surplus capital efficiently in order to protect it and grow it will become a process that you may want to consider. Ideally, and perhaps obviously, you should produce more than you consume and save the difference. Tell that to governments who like to produce nothing and also consume more than they receive in taxes. I recently sold a property. I sold it for a price that was considerably higher than what it was when I bought it 3 to 4 years previously. The profit from this trade has been very beneficial and it's opened up many new opportunities for me, opportunities that I'm very grateful to have. But it's also created somewhat of a problem, which is a good problem to have actually. And the problem is, how do I allocate this capital in order to protect it and grow it? I've heard stories of successful entrepreneurs that make good money with their business early, but then they go on a big spending spree and they blow it. They, buy a $1 million mansion and they have debt on that, or they buy a Lambo or something, and they think their business income will continue at the same pace forever, I guess. If the demand for their goods and services stop, they have a problem. If they invested a percentage of their capital or paid a professional money manager to manage it for them, they could have been in a much better position financially. That is if they had chosen their assets and chosen their money managers wisely. This is why I believe developing a foundational economic understanding of the world is so important. If you happen to acquire some wealth through employment, inheritance, real estate, or speculation, having a macro view of the world and markets and a macro thesis as to what is going to happen in the near to long-term future can give you the confidence you need to allocate your capital effectively for gains and protection. My story is that I knew very little about economics up until the age of about 33. I'm 40 now. So when I was 33, this is when I finally decided that things had to change. I relentlessly self-educated in the world of economics, finance, and investing, consumed hundreds of hours of podcast material, read so many articles, and I'm very glad I put in the effort to doing that. My hope is that for future generations, they will be able to develop a foundational economic understanding of the world much earlier in life than I did. Thanks largely to the internet and the growth of decentralized education, this has already started to happen. The access to the knowledge and wisdom required has never been more freely available or accessible. Once you've developed a foundational economic understanding, you can then develop a macro thesis as it pertains to the current world and markets. All your major life decisions will now be filtered through your new views. This acts as a potentially effective de-risking strategy when it comes to investing your hard-earned capital. You can now better assess the probabilities of your investment working out in your favor. One example would be assessing where the interest rate on government bonds will be at a particular moment in time before you place your trade. Learn the basic principles of Austrian economic theory and Keynesian economic theory, and then decide for yourself which leads to better outcomes. Keeping in mind knowing that Keynesian economic theory dominates the big Western countries today. You can even come up with your own economic theories and test them by developing a thesis for a particular moment in time and then seeing what happens in the future to see if you're right or wrong. If you haven't started on this journey already, I can highly recommend the book Economics in One Lesson by Henry Hazlitt. It is a fantastic starting point for getting into economics. Generally speaking, this book details really well how cash flows through a society and how incentives affect where the cash goes. Towards the start of the year, I purchased 2 investment newsletters. I've purchased one more in the time being, but I'll just talk about 2 for now. One is called Crisis Investing, which is inspired by the great Doug Casey, and the other one is called Capitalist Exploits Insider. They've both been really, really fun to read, really enjoyable, and funny a lot of the times. They're actually quite humorous, and they've been really beneficial when it comes to making trades and placing an investment and allocating that capital wisely. I highly recommend paid newsletter services, and I'm just going to list out some qualities that I look for in the author of these services. First is that I respect the author. We share the same macro thesis on the current state of markets and economics. We share similar values relating to morality and ethics. They are much more knowledgeable than me. They are much wealthier than me. They are better connected than me to people who have information that could lead to better investments. Now, I wrote this newsletter a little while ago, and the second point about sharing the same macro thesis, I'm not sure I would fully agree with anymore. I think having a different macro thesis and having your views challenged is good, of course. If everything seems in alignment, I apply my own version of due diligence, and then I'm happy to invest in some of the assets that they recommend. The Capitalist Exploits Insider newsletter is a great service where the writing topics cover unfiltered macroeconomic and geopolitical analysis, and Chris McIntosh goes over 5 stocks, it's called the Big Five, that he's looking at or is on his radar at the moment, and they're not recommendations as per se, but he's interested in them. Capitalist Exploits implements an asymmetric investment strategy where the stocks they recommend have a low downside risk, but also a high upside potential. There's quite a focus on the oil and gas industry and something like offshore servicing vessels that service the oil wells out in the ocean. Capitalist Exploits is quite a fun read. If you are an anarcho-capitalist or a libertarian, you will love it. If you are a communist or a super woke or you probably won't like it at first, but maybe give it a chance, and it'll maybe get you thinking about some of the ideas you have. Crisis investing. Actually, Doug Casey's crisis investing, as he kind of inspires it. He doesn't write a lot of the newsletters. He just kind of chips in here and there, but essentially it's inspired by him. As a big fan of Doug Casey and his wisdom, I was always going to buy the Crisis Investing newsletter eventually when I had the cash available. When the cash came around, I purchased it, and it's been a great fun read on the Substack platform. Doug Casey, Matt Smith, and Lau Viges write a great newsletter based on stock picks either identified by Doug or endorsed by Doug. The focus is on current and emerging opportunities in the precious metals sector and the natural resources sector. In the VIP level of the subscription, you also have access to private placements and warrants. So private placements is where you can get the stock cheaper than market price, and warrants is where you can buy the stock at a fixed price in the future. I've never done that before, but apparently you can get access to them through the VIP level of this newsletter. The basic subscription also comes with access to the File community, which is based on Mighty Networks, and the newsletter is based on Substack, which I think is a great platform for newsletters because the app is really cool and it's just a nice reading experience. The font is nice, and yeah, I have my newsletter on Substack as well. And I think it's the future. It's nice to be able to read newsletters on your smartphone or iPad, and it's just really handy. The writing in Crisis Investing provides great insight and also covers Plan B and Plan A concepts, ways to de-risk your life and protect your purchasing power moving forward into this rapidly approaching global economic shitstorm. I highly recommend both of these newsletters and see them as great value for money. I also recently subscribed to the Tucker Letter, which is by E.B. Tucker, and that is an awesome newsletter. I'll talk about that in another video, but highly recommend the Tucker Letter as well. Now let's talk about entrepreneurship and investing, or versus investing. I am early on in my journey in entrepreneurship. I want to become an entrepreneur and I want to make some money doing that way and hopefully providing something of good value to society and making some money through doing that. But at this point in my life, I've made more money through investing than entrepreneurship. So it's made me question how much time I dedicate to each pursuit, to capital allocation and investing, and building a business and becoming an entrepreneur. In terms of obtaining the initial capital to invest, you can do that by being either an employee or an entrepreneur. The huge problem lies in the fact that as an employee, you have a ceiling on how much you can earn. Therefore, becoming an entrepreneur is the preferred option if you're looking to increase your income by the means of starting a business and scaling a product or service. I won't be giving up on entrepreneurship, but the thought has crossed my mind that maybe I'm better suited to being an investor than being an entrepreneur. I recently listened to an interview with the mining entrepreneur and philanthropist Frank Giustra, and in that interview, he said that not everyone is able to be an entrepreneur. Not everyone is cut out for it. So I guess time will tell for me, but for now, giving up is not an option. Thank you very much for watching this video. I hope you've got some insight into investment newsletters and just the general way to approach the thought of pursuing entrepreneurship and investing. Please do your own due diligence with investing. Of course, there's always risk. This isn't financial advice. So pay for good research if you want to pay for research, and educate yourself as to economics and how it affects day-to-day life and how cash flows through society, and you'll be good to go. So thank you very much for watching. Please like, share, and subscribe to my channel, and you can check out my Substack at shannonhaig.substack.com if you would like to check out my newsletters. Peace.